Hi everyone, thanks for coming back. Taking a look at our update for today. We're going to look at SPY and deep dive into Roku and some of the winners from the stock scan. So first, taking a look at SPY, the market was pretty choppy today. You see, there's quite a bit of green, but it was not. You know, a lot of the winners were found here either on stock scanner or looking for continuation from yesterday, like Roku, for example. So the SPY yesterday, if we, if you take a look at the action, you see it gap down significantly. This was the market open, the first candle. So you see it close at 330, and then it gapped all the way down to 325. So you're looking at a $15 gap down move, and it just chopped around. You see, it did not do much. It hung around this key level of 323. Then towards the end of the day, this dotted line is the end of yesterday. You see there, it made a move and actually it closed at 327. So it was at 330, dropped down to 325, and then closed at 327, only $3 below where the prior day's close. So that not too bad for the end of the day, but the rest of the day it was just all chop, all chop. A lot of the stocks were down, and then they came back towards the end of the day. But I wanted to take a look at Roku. So let's look at Roku yesterday. Yesterday had a very strong move up, and you can see first if we look at the daily chart, these are some key levels here. So you had 166 here. Notice, a lot of price action happening around this level here. And a reminder, each one of these represents 1 day of price action. So this was yesterday and this was today. So you saw there was follow through. And we'll see what happens tomorrow. Will there be continual upside or will it chop around for a while? We'll have to see. But, there were multiple times you could have got into this stock. One indicator was the significant volume. Volume was up. And if you look back, the last time there was even something close to that was back in July 9th or July 10th, and still was only 71% of this major monster move here. So could have got, here's a key level. A lot of traders were looking at to get in. This was a key level here because you can see how price stopped for a bit, moved up and then pulled back. A lot of things going on right here. So once it breaks this level, traders were looking to get in, and this was also a key level as well because it pulled back and held that support. So once it broke that support level, it's another entry. A lot of traders would have looked to get into. So let's look at the 5-minute chart and see how we could play that. So look at this really nice action here. You had a gap up from 161, gapped up all the way, moved to 171, broke right through this key level here, which would have triggered a lot of traders to get in. This is the first 5-minute candle of the day with a lot of volume. Look at the next candle, broke that one. See how it reacted to this other key level, 173. It stopped there, paused, and then broke through and closed above, which is a very bullish signal. And notice the volume was very strong. So this would have been a good entry point for anyone who was waiting to get in with a double confirmation. You would have had actually a few confirmations. You had the highest volume here well over the last 30 days, 30-day average. You had good follow through here. You broke through a second key level. So this would have been a good opportunity to get in. And then this next key level, say you missed that entry, you could have got in here, 178, once it broke this high and closed above this key level. So 178, say you got in there to 184, pretty sizable move, and depending on where you got in at here, you could have been up anywhere from $26, $25, $15. It all depends where you entered. But for the day, it was up about $27, $28. So powerful move here. Price action, telling you when to get in and when to stay in. As long as it rides this 3 exponential moving average and stays above this 8 exponential, then the trend is up. And you see that's what happened. Trend is up, and it started chopping around, which is what you expect after this kind of move. You would expect some chop and consolidation. So I would actually look to take profit somewhere around here. Once the move stops and it starts chopping, then that's time to get out. You could have actually got out before here. A lot of times, it's very helpful to sell your position into strength. So you're holding your position to make 100% gains, 200% gains. Every trader has a level, but you don't want to get stuck in the chop, like this, because even though you had gains here, this will just chop away your premium and erode some of your gains that you had. Because you got to remember, price with options, stock options, they lose value and they decay. So you want to maximize your stock options during significant price moves. So that's all I got for today. Just wanted to quickly give you an update on a very strong price move that happened this week. And also bring attention to the stock scanner, the Powerful Gains stock scanner. You can see there were some pretty good moves here. Look, Carvana up $53, Zoom up $24, Charter up $18. These are all identified from the stock scanner. So if we look at Charter, a pretty powerful move. You move up, pause for a bit. Once it broke above here, I would have got in. So you say you got in here, once it broke this high, 618, rode it all the way up, to 628, 27. That's a $9, $10 move. Even if you would have caught $8 of that move, it's still good, very profitable for whether you're buying one contract or 20 contracts or 100 contracts. The move is still the same. It's scalable. That's the beauty of price action, is knowing being able to identify when to get in, when to get out, and how long to stay in. When directionally does it make sense? So that's all I got for today, and I'll be posting more content later this week, and get back to at least 2 or 3 times per week of posting content. Thanks.